To understand how this incredible system works, we need a scene. Let's say you're out buying fruits from your local vendor, and you've picked up some apples and bananas that total cost you 100 rupees. You check your wallet but realize you don't have any cash on you. You simply decided to pay through UPI. You take out your phone, open your UPI app like PhonePay, and scan the vendor's QR code. You type in 100 rupees, confirm it, enter the PIN, and boom! Your app sends the payment request to NPCI, an RBI-regulated entity and creator of UPI. NPCI checks if the vendor's virtual payment address or VPA is valid, and once confirmed, NPCI send both yours and vendor's bank account details to your bank. It contacts your bank to see if you've got the funds. Then your bank debits that amount and tells NPCI about confirmation. NPCI now tells the vendor's bank to credit 100 rupees to their account. The vendor's bank credits the money, and both banks give UPI the thumbs-up confirmation. Within seconds, the successful status comes back to your app and throws. The vendor's phone buzzes with a notification, and you walk away with your fruits. But what if you doesn't have enough balance in your account? Then, your bank checks your balance and realizes you only have 50 rupees. After that, your bank informs NPCI that there's not enough money in your account. NPCI cancels the transaction and sends a message to your app. Your UPI app notifies you of the failure, which makes you frustrated. So now you're standing there awkwardly, realizing you either need to try a different payment method or ask your friend for a 100 rupees loan. In conclusion, if there is insufficient balance in your account, UPI's back-end process automatically stops the transaction at the point where your bank checks the balance. The system ensures that no overdraft occurs unless pre-authorized, and you are immediately notified of the failure. How did a technology designed for a specific country start changing the way money moves across borders, and most importantly, how it works behind the scene? Imagine a system so seamless, so adaptable, that it's turning heads even in nations with established digital payment solutions. Digital payments have grown exponentially in India in recent years, thanks notably to the Real-Time Payment System, Unified Payments Interface, or UPI. The story of UPI goes back to in April 2016, launched by the National Payments Corporation of India, NPCI, with support from the Reserve Bank of India, the apex regulatory authority for banking and finance. Initially, digital payments in India were limited to cards, internet banking, and a few wallets, which worked but were far from perfect. They either had high fees, required cumbersome setups, or relied on infrastructure not everyone had. UPI was created to change this, making digital payments accessible to everyone, from a tech-savvy teenager in a metro city to a vegetable vendor in a small village. It allowed you to transfer money directly from one bank account to another, without needing to remember bank details. All you needed was a virtual payment address, VPA, and boom, you were ready to send and receive money instantly. Initially, UPI adoption was mainly urban, driven by younger, tech-savvy users. But things have changed drastically. Thanks to easy-to-use interfaces and regional language support, UPI has reached rural India and is used by people of all ages. Street vendors, small business owners, office workers, and even farmers are accepting UPI payments. But it's not just the ease of use that's impressive. UPI's open architecture allows third-party apps to integrate with banks, which means users can choose between different apps while using the same system. No matter which app you're loyal to, UPI doesn't discriminate. This interoperability has broken down barriers, giving users flexibility and making UPI the most preferred choice in India. It's now so popular that more than 350 million users and 50 million merchants already use this system, which causes around 15 billion monthly transactions in September 2024, and the monthly transaction value exceed 20 trillion rupees, which is roughly $204 billion. The growth of UPI has been nothing short of staggering. From starting with just a few banks in 2016 to becoming part of almost every major bank in India today, it's clear that UPI's success didn't happen by chance. It wasn't some overnight miracle either. It took a series of big, game-changing factors to make UPI the powerhouse it is today. It all kicked off with the Aadhaar system back in 2009. Aadhaar was a major game changer, giving nearly every Indian a digital identity. Imagine being able to verify who you are with just one ID across so many services. Aadhaar was like giving everyone a key to the digital world. So when UPI came around, it already had the infrastructure to reach every corner of the country because people could sign up in a snap. Then in 2016, demonetization hit like a plot twist no one saw coming. One moment, everyone's cash was king, and the next, it was barely worth the paper it was printed on. This forced people to look for alternatives, and digital payments became the lifeline. It was a tough time, but it made the idea of cashless transactions click for millions of people. Of course, we wouldn't be here without a visionary government that saw a digital future way ahead of time. With initiatives like Digital India, the government didn't just talk the talk, they backed it with real campaigns, policies, and incentives that made it easier for people to get online and go digital. And they couldn't have picked a better time, because cheap and fast internet was right around the corner. India's internet costs are among the lowest in the world now, which has been an absolute game changer. Thanks to affordable data plans and fast connections, everyone, from a farmer in a small town to an entrepreneur in Mumbai, can use UPI at any time. Then came COVID-19, which turned everything upside down. COVID-19's push made contactless payments not just a nice-to-have, but an absolute must. Suddenly, cash felt like it came with a side of germs, and people wanted safe, contactless ways to pay. UPI was right there, ready to fill that gap. It wasn't just a convenient option anymore, it was an essential one. The rise of mobile phone adoption was the final puzzle piece. With over 1 billion mobile users in India and smartphones becoming cheaper, almost everyone now has UPI right in their pocket. Thanks to initiatives like Made in India, smartphones and basic mobiles are more affordable than ever, making digital payments accessible to everyone between. UPI doesn't need fancy tech, just a smartphone or even a basic mobile phone does the trick. And let's not forget the real reason UPI is thriving: happy consumers. UPI's made life so easy that people can't get enough of it. No more digging through wallets or worrying about change. Just a few taps, and you're done. People are practically hooked. UPI done wonders for India's economy, no doubt about it. First off, it's made cashless payments super easy for everyone. We're talking about over 15 billion transactions a month. With this kind of volume, small businesses are thriving. Local kirana shops, tea vendors, even auto drivers are now just a QR code away from payments, which means more business, less hassle. For example, during 2023 alone, UPI hit $2.1 trillion in transactions. That's a tons of money moving smoothly without cash, keeping things efficient and transparent. This ease of digital payments is also driving tax revenue up, since every transaction is recorded. The result? More funds for infrastructure, schools, healthcare, and many more. Currently, India ranks first worldwide for real-time digital transactions, with a global share of over 48.5% in 2024, well ahead of China. And it's not just India that's loving UPI. This little innovation has started going global. UPI is expanding to countries like Middle East to Europe, Asian countries to neighboring countries. It's like India's gift to the world of digital payments.